All right, good morning then, folks. As we head into, or we have just opened for European trade on Friday the 15th of September. You can see Asian stocks rally as China data, boys mood, China data plus the ECB being finished with their interest rate hikes, or, I mean, barring any crazy sort of inflation prints, you'd have to imagine that they are finished, or they have certainly suggested that they are finished. I would argue they have pretty much told us that they are finished, barring any sort of crazy inflation prints. Inflation prints coming ahead, which, I mean, as an economy heads towards an economic downturn, you'd struggle to imagine that is the case. But obviously, if we come into winter now and oil prices are high, maybe that drives a bit of inflation. But if it's just oil and its underlying inflation throughout the rest of the economy is still trending lower, well, then I can't see much more rate hikes from the ECB, certainly. So that's really what's gone on, kind of, I say, over yesterday and into this morning. The markets will have plenty of impetus for an equity rally at the European Open. So you can see here, after better than consensus China data added to the optimism already in place from expectations for a peak in rates at the biggest central banks. So positive Chinese data goes in line with that sentiment. Stocks continue to trend higher as a positive all around for markets. And you can see across the board, stock indexes, the US equity futures, European equities, Asia Pacific equities, all higher, apart from one of the Chinese stocks, CSI. But apart from that, everything else is higher. Commodities higher across the board. Bond yields higher across the board. That is just complete risk on trading. I mean, it's not often these days you've seen bond yields higher and equities higher, but that's technically the way it's supposed to move. You know, positivity surrounding an economy is kind of positive for bond yields, positive for equities, but bond yields higher has been negative for equities in recent months due to interest rates rising. But this is the historical, risk on trading across the board that you would read in a textbook. I mean, you've got US equities, European equities, Asia Pacific equities higher, you've got commodities higher, you've got bond yields higher. You then look towards your US dollar, lower, your Japanese yen lower, your Swiss franc lower. You then come to your Aussie, Kiwi, which are both higher across the board. Now, yes, just straight out of a textbook, risk on trading, clear positivity. As we start today's European session, we can see equities change these back to a slightly higher time frame, and you can see the rally into yesterday, into the close yesterday, and then has continued on over the night across the board. In the S&P, the Dow Jones, the Nasdaq, and the Russell all pumping higher. You can see the DAX, the Eurostock, the FTSE all pumping higher. You can come to the US dollar. See the US dollar certainly on today's trading session, massive downside in euro and cable. We can see overnight euros popped higher, cables popped higher, but also as Aussie, Kiwi. And then you look at dollar Swiss slightly lower. You can see dollar CAD continues to trend lower. Dollar yen slightly popping higher. Obviously the Japanese yen is the safe haven of choice, so in risk on trading, the Japanese yen should in theory sell off more than the US dollar. You then come around to these charts where you see oil continuing to truck higher, break out from that ascending triangle. Pretty perfect. We were looking at that earlier on in the week on multiple videos, and it has popped higher through there, retested and kind of rebounded off 88.50 and then continued higher to above 91. Now, that is something that needs to be kept an eye on. If that gets above, it's above 90 now. That gets above to 100. I wouldn't expect to see the same levels of risk on trading. But for now, it's okay. But markets will turn around to that price of oil. If that just keeps trending higher, you can see that market. If that just keeps trending higher and higher and higher and higher, that will become a problem at some point. Right, it's already causing inflation to slightly tick up. We've had some inflation prints across the calendar this week, which has slightly ticked up, and that is not likely to be positive going forward. But we can forget about that for now. Look at the rest of the markets booming. But I mean, these yields, do these start to become a problem if these keep rallying at this speed? Let's see. But for now, markets positive across the board because of the ECB yesterday signaling that they are done. Look towards China. It's industrial production positive, retail sales positive, the unemployment rate ticks down. Fixed asset investment, which is kind of a real estate figure, not brilliant, but industrial production and retail sales in China massively positive, beating consensus quite aggressively. So yeah, we'll have to see how markets play out over the course of the rest of the day. But positivity in the handover from yesterday's session into this morning's session from the ECB. Positivity continued, and we have had significant follow through off the back of positive Chinese data in the overnight session. Equities higher, dollar lower, yields higher, classic risk on trading. Do these yields become a slight bit of an issue? It remains to be seen, but you got to stay on the bullish side of the market. Do you really want to buy at these highs? Yeah, it's tricky. Any sort of a dip maybe worth buying. I'm personally not going to chase these moves at the highs. It's a pretty difficult trade to just chase them at the highs after they've had that sort of a move, but we'll see how it plays out over the course of the day. Oil's having a bit of a dip. Certainly worth keeping your eye on. Let's see how far it dips, and is it worth buying again at some point. But positivity across the markets in today's trading session. Let's hope that continues into the close today.